Thank you for joining us for the Q4 update for REFASHIOND Ventures. Because of the agenda today, I'm not going to start out by pulling up my slides. I think that will make it easier for Matthias to pull up his and get set up as we jump into the portfolio spotlight. So we decided this quarter that one of the things we'll start doing is at each call of this sort to give one or two of the founders in our portfolio an opportunity to talk to our LPs about what they're doing, what they're building, why they're doing it, and to give the LPs an opportunity to ask them questions. And so we're starting out with Matthias. He's founder and CEO of Jive, a startup that we're really excited about. One, because of what he's doing. Two, because of some of the synergies. And I don't like to use synergies, but I got an MBA, so maybe I should try to get some value out of the time I spent in school. But some of the synergies that we think exist between Jive Technologies and some of the other startups that we've invested in. So on that note, Matthias, I'll turn things over to you.
Well, thank you, Brian, and thank you so much, Lisa. It's really an honor to be here. Super excited to call you guys part of Team Jive and bring you along in the journey. What you guys do for us founders, it's really amazing, and you know, we always wish all VCs worked the same way you guys do. So we're really grateful for all that you do for us. It's the honest truth. So let me pull up real quick here some slides. I promise I won't keep it. I'll keep it short, probably not too long. So I know there's not much information about Jive out there, so I'll go straight to the point here. Frontline workers, millions of them out there. So who are they? People in obviously supply chain, people in manufacturing, people in logistics, people in I don't know, healthcare, even hospitality. There's millions of them out there. I think there's over 60 million in the US, essential workers and deskless workers. Probably over 1 billion in the rest of the world or more. Anyway, these people are, as you know, not the most they don't have all the tools that they need to work. There's all these investments going on in cloud infrastructure, edge compute, AI, but unfortunately, they're still using paper clipboards. Two-way radios are everywhere. Many people are even using, you know, pagers still. So why is this still happening? Why can't you just install an app on some phone and get them up and running with all that cloud goodness? Well, unfortunately, these people are not Uber drivers. They are operating heavy equipment sometimes, maybe even dangerous chemicals or medical equipment. So it's not that simple. So what is a business supposed to do? Well, how do you actually get them the tools they need to go about their workday? The answer to that problem is actually not a simple one. And part of the reason why it's not simple is because these things that we have in our pocket. And by the way, I love my iPhone. I'm an Apple person and I love all my products, but they're more powerful than the space shuttle, literally. So why would you need all that power to deliver them a checklist or a workflow? And more importantly, why would you pay for all that power? And why would you pay for all that it takes to manage it, constrain it, secure it, deliver it, deploy it? It's a big question. It's not a simple answer out there today. And that's what we're trying to do at Jive. We're really bringing about a generational change in how the last mile is closed for this critical information that frontline workers need. We think we're ushering a whole new era in connected frontline workers. But before we get to that, I want to spend just 2 minutes talking a little bit about the team, a little bit about myself, because it really goes about putting a little bit more meat into what we're doing here at Jive. Jive is actually not my first startup. I started I was part of another startup that started when I was in college, getting my PhD. I was doing some work in electronics, flexible electronics, actually. And these people came from Europe with some IP that they needed some help with. I took on that project as part of my PhD thesis and built some technology for them. And when I graduated, I basically became their first employee. So it was just 2 or 3 of us. And then not long after that, became their CTO. And then one day I participated in this bid for Dell computers. And I don't know where I won the bid. I had about 10 or 12 people in my team, no experience whatsoever in the real world, out of just a few things here and there. And amazingly, we succeeded. About 18 to 24 months later, I was supporting close to 2 million units worldwide. This was for their enterprise grade devices, where laptops, tablets, you name it. And they were mostly for enterprise use, and they were or government use. And there was an end-to-end biometric stack. So it was my front-end sensors, but it's also the security integrations, the firmware, the software that ran with Windows, and all the integrations to the Microsoft backend framework. So it was an end-to-end solution. It was a really fun project. At the peak, I had close to 50 or 60 people in my team here in Seattle, supporting everything from basic R&D to IC development, literally semiconductor work and software integrations, all kinds of things, even manufacturing support. We had our own manufacturing programs in Asia that were supported directly from my office. All this led to IPO. It was 2015 or 2016 in Europe. That's probably why you never heard of it. So it's Scandinavia. And I stayed on for a couple more years and then finally took a break. And then I connected with my friend Patrick about 2 years ago or so, and we started tossing around some ideas, doing a lot of pulling around, nerding out in our basements. And then finally here we are today, getting things ready to take off. So must be crazy for doing this twice. Anyway, but I think it's something that we can't get rid of, this startup spirit inside ourselves. The people at the bottom, obviously, you know Lisa, you know Brian, superstars in supply chain. Zach was the founder of Packet, one of the pioneers in edge computing infrastructure. Today, he's the global head of edge at Equinix. And for those of you who don't know Equinix, I think they're the largest provider of co-located data services in the world. So one of the biggest players in enterprise infrastructure. So the fact that he's backing us goes a long way in saying that what we're building here is really a deep tech technology play. Adam, he was the founder of Hackster, which is the world's largest open source hardware community. Yeah, it exists. And it got acquired by Avnet a few years back. Domingo, he was one of the pioneers in mobile device management. So his support is super special. He developed an app many years ago, one of the first ones that did mobile security, and it got acquired by Symantec. And then Symantec got acquired by Broadcom, and then they merged with VMware. He was an executive there. I think he recently is doing a new startup. So yeah, so having the backing of all these people is super important for us. We've been a little bit discreet for a while, and we wanted to really build a little bit of a deep bench when it comes to technology support, and I think we got it. So we're good to go now. So let's move on here. Okay, I spoke a little bit about manual processes. I'm sure you've seen paper checklist or paper clipboards at the your healthcare office. The picture in the top left, we're actually involved in the maritime industry with a couple of companies here in the Pacific Northwest, and some of the port operators, they tell us, by the way, that's a real picture of a dock worker. They tell us we have these dock workers basically managing containers with their two-way radios. Talk about supply chain problems, right? Hospitals, I mentioned about 80% of them still using pagers. That could lead to a whole other chat. We maybe can talk about that some other day. The one in the middle, I want to just speak 2 words about that. That's a little pink sheet. For those of you who don't know, that's called a job card. Some people call it a traveler. It tells the person at the shop floor what to do. And you would think from that picture that maybe it's just some small shop. But believe it or not, those parts are airplane parts. Yeah, isn't that scary? Airplane parts. Now, here in Seattle, we are surrounded by Boeing facilities, and I'm sure Boeing has, all kinds of fancy IT infrastructure. But what about all those hundreds and hundreds of suppliers? And by the way, 2 out of 3 of workers are hired by SMBs. What about all those suppliers, hundreds of them? How do we get them cloud intelligence? That's where the problem really is magnified. What is this industry? Business terminology here. It's called the enterprise digital mobility market. And they say a picture is worth 1,000 words, right? That picture on the left there, that's called a cage. That is a location where you go in and sign in and out digital scanners. And those are fancy scanners. They cost each maybe like 1,000, probably a little bit more than that, some. And the reason for that is they're full-blown Android devices. And the cost of the scanner is huge, but that's not just the only problem. As I mentioned at the beginning, managing all this stuff, the security stack, the user access onboarding, the fact that you have to train your IT staff to basically use them, all of that has to be baked in onto that price, and it goes on top of that $1,000 or $1,500 you have to pay for the device. And you can't just go buy these things at Best Buy. You actually have to contract a reseller, and the reseller actually sells you a package of scanners. They bundle some of that security stack on top, which, by the way, they probably get some other company. So they are basically resellers of resellers. So you see how this really starts stacking up and getting very, very expensive. It's difficult to deploy. It's a high friction process just to do this. So imagine if you want to get rid of a paper clipboard for a checklist, it's the same. So how do we solve this problem? The industry is actually broken. It's just impossible to actually move forward the way it is today. So what does the critical industries really need? They need a Square. They need a Toast. And I don't know if you guys are familiar with Toast. Toast is the company that does end-to-end solutions for restaurants. You guys remember Square when they came out maybe like 10 years ago with a little credit card reader, the little white thing, 1999 or whatever it was? It did one thing, just one thing. It basically scanned your credit card. But what that did for Square is they basically took over the entire, street vendor market. They took over shops, coffee shops everywhere, and vendors and retailers. And they basically allowed them to get a foot in the door and eventually bring all of their cloud infrastructure, all of their financial services, and all of this other stuff to all these companies. This is what the industry needs. And this is what we're doing at Jive. We're basically the Square for critical industries, or the Toast for manufacturing. That's what we are. Now, there's 2 components in both Square and Toast solutions. One, obviously, is the platform. And 2, you somehow need to get in touch with those people at the front line. There needs to be a physical interaction. So we are doing something very similar. Obviously, we have our own wrinkles, but you want to basically offer a similar package. So talking a little bit about the platform, and again, I got my pink sheet here. We are working with this company that does what is called manufacturing execution systems. And I don't know if you're familiar with what that is, but basically they keep track of materials. They also have a little bit of an ERP edge to it, inventory, et cetera. They also do really fancy workflows, and they help the workers go about their tasks. And I'm talking to the CEO of this company, and he tells me, hey, I have this really fancy software. I can run it on premise. I can run it on the cloud. I can do all these things for all my customers, but I have a tough time sometimes getting more and more users to actually interact with it. So how do I get to these people at the front line? And he was telling me an analogy. He says, it's like having a fancy accounting software and then all my people don't expense their receipts. Someone still needs to reconcile all that. Someone needs to somehow close that last mile for data, or first mile, depending on how you want to look at it. That's what these Jive pages are. They're basically a way to abstract that logic that may come from his system and deliver it to the front line. It just closes the loop. Now, how we're doing this, I mentioned at the beginning, we're kind of building a brand new way to deliver the information. It's a long, complex story of how this is done, but it basically simplifies the entire delivery stack. It's a little bit of edge computing and cloud infrastructure. At the end of the day, it's basically a microservice solution, and we'd love to schedule some time with one of you guys if you want to dive a little deeper into how it is that we really do. One of the great things about this architecture is the second point, the cloud touch points. Because we abstract everything to some kind of microservice, the actual hardware becomes extremely simple. What does that mean? Complex OS drops out, heavy apps drop out, high power consumption, expensive ICs. All of a sudden, you don't need any of that. You don't need that space shuttle that we were talking about at the beginning to do a checklist. And most importantly, it's not just the cost problem that goes away, the deployment all of a sudden becomes a cloud problem. You're just doing an extension. You're hooking them to a new web service. You're hooking into a new user account. It becomes a cloud extensibility problem rather than trying to deploy huge amount of mobile devices out there. So onboarding users, managing services, et cetera, becomes that easy to use on-demand as a service idea that we were talking about at the beginning. Now, just to wrap it up here, it's not really just about cloud services. What about IoT platforms? If you want to control equipment or specialty networks, you know, a lot of industrials have deployments like LoRaWAN, or they have some other 5G for industrials, IT resources, even security platforms, you name it. All of a sudden, Jive becomes an aggregation and delivery platform. And that's how you really start getting into these big numbers. Healthcare, you're talking about over 20 million of them out there. Again, 80% of hospitals still using pagers. Hospitality is a really interesting one. I was talking to a CEO of this company that does really nice cloud-based software for managing operations in hotels. And she was telling me, we have all this fancy cloud stuff that is beautiful, but how do I get it to the housekeeping staff? All I need to tell them is I need to deliver towels to this room, or I need to do this checklist in this room for service. And I can't afford to, you know, everybody run around with an iPad or an iPhone just to do a little checklist. And on top of that, all the support software that goes on top. Logistics, we spoke about that. Manufacturing, we spoke about that. There's millions of them out there, all of them needing access to critical data. And that's what Jive is. We're basically closing the last mile for frontline tech. With that said, I would love to take any questions. I know I went through this pretty quickly, trying to stick to schedule here. If you would like to chat a little bit more, please reach out. And I can't wait for the next couple of months as more and more information about Jive starts to come out there. But you guys are one of the lucky ones to get to hear a little bit about first. So yes, thank you.
Thank you. Thank you,
I
Matthew.
want to just say that I'm so excited about Jive, and I'm so excited that you're in our portfolio. It is honestly, when I first started going down the rabbit hole of advanced manufacturing for apparel supply chains, this is exactly what I had in my head that I wanted and saw a need for across manufacturing. And of course, there's a bajillion other use cases. But yes. I think I see a couple of people on the call that I know a few use cases could be really useful for their particular industry. So I'll turn it over to the audience. Please ask them questions. This is going to be game changing.
So the one question that I think would be interesting to think about, Matthias. So one, where are these being manufactured? And then, you know, what's the cost? And I know you probably can't tell us specific numbers, but just in terms of magnitude compared to, let's say, an iPhone or an Android.
Yeah. So compared to an iPhone, definitely you're talking about at least an order of magnitude lower. We're not going to get to numbers now, but the manufacturing actually is a great question, because by the time you start boiling this down to just basically access simple cloud services, what you need in terms of the delivery platform is very simple, and all you need is just a few radios and a display driver, and for the most part you're done. It depends on really what else you want to do. So that actually unlocks an ecosystem of off-the-shelf modules that are almost ready to go in some cases. So obviously we can support a lot of these modules with a software stack. So if you're someone who's building devices, we can help. Obviously we're putting out our own, but to your question, because the point is to create this access to essential cloud services, the complexity of the endpoint drops out. It becomes basically an extensibility cloud problem, and you can access a lot more commodity parts that can be assembled pretty much anywhere. They can be assembled in Asia, or they can be assembled here, because like I said, some of these modules are already in some cases ready to go.
Brian, did you have a question? Lindquist?
Me? My question, I have a lot of ideas. I think the more specific question I was curious to ask was, I had a major issue where we'd buy Zebra scanners, install Android software. We had thousands of them across many facilities, and it became almost a recurring cost to keep buying them because they would just disappear. Have you given any consideration to the asset management piece of this when things get distributed either to individuals or they're used by shift workers? How do you control that these devices reside on company property, don't get legged, don't get put in boxes? Are there hooks in your roadmap to kind of ensure that that's accounted for?
Yeah, for sure. That's a great question, and it's funny that you mentioned that, because you're not the first one to say that one of the overhead cost of the device is the actual loss percentage of them that you always incur every year. Well, a couple of quick comments. Number one, the device, the cost structure of the entire solution is completely different to what you are referring to with Zebra devices. So all of a sudden, losing one device is not as painful as losing a Zebra device. Number two, the deployment model here is more of as a service, kind of like Square and others. So basically, you can have a hardware service type model in which the loss of the device is basically baked into the subscription. But most importantly is this slide right here. When Jive works as an aggregation platform, all of a sudden the device is not just a barcode scanner, but rather you can actually hook it up into other things like an IoT platform. So all of a sudden it also becomes your control for, say if you're a maintenance person, it also can do, control your HVAC system, or, trigger some functions in some equipment. And at the same time, it can be hooked into security platforms. So like, for instance, if you need to access into the backend of some ERP system and you get sent an MFA code, like we get sent to phones, then all of a sudden the device becomes a more essential workday tool. So it becomes a personal device to the person. And then it almost, you can start thinking about it as if one of those things that the person grabs first day in the morning to go about their day. That mentality shift already makes it different from a barcode scanner that you use it a couple of times, you just leave it on the table, and that's how it gets lost. Hope that answers your question.
Yeah, Matthias, I've seen similar platforms that probably are a little more focused on service tech, manufacturing tech, where it has these components in it, and it also has it allows the tech to have access to, service bulletins, to take pictures of the unit, to take pictures of an upgrade that was done to the unit. The screen says this thing's been upgraded. And I'm curious how you think about that process. I mean, it's much more complex than some of these pieces. And I'm not saying yours isn't a very valuable one, but I do see as we go more automation, more tech, I do see the ability to document, upgrades and things like that are done. I mean, you just on an airplane, you have to document, you change a bolt on a wing.
Yeah. So you're talking about the devices that workers may have that are capable of doing a variety of things, taking pictures of when they're playing part. That's what you're talking about?
Well, it does. The pictures are a way of documenting it. So the next tech that goes out there, what did the last guy do here? Oh, he added that server to the cell tower or whatever.
Yeah. So two quick comments about that. First one, our go-to-market focus is scale. So we are going after these big numbers here that you see here. And by and large, in order to address these numbers, and again, if think about Square, just the device only did just the one thing. And that's how our go-to-market strategy pans out. We really want to go after these essential critical workday tools that empowers millions and millions of people out there, kind of the Square model. Second, the solution stack that I spoke about at the beginning, and maybe we can talk a little bit more about and geek out technically later on. That's a solution stack that can also be used to power other devices. So we are talking with some companies that they actually want more capabilities, and this concept of abstracting away a lot of the software complexity that is at the endpoint and basically making a cloud integration problem still applies. So you can still put a camera if you wanted to, and still operate in a similar way. So it is something that there is definitely in our roadmap, and we have done some studies about it, and we have some reference design already. But again, our go-to-market strategy is about these numbers. We really want to make a difference for millions and millions of people, and sometimes in order to do that, you have to focus on the very simple, essential things. And that's what that we're going after at the beginning. Just like Square, remember, just that little thing did one thing only.
Yeah.
Any more questions? I have one question. I'm sure as you've been talking to venture capitalists, you've heard comments like, "Oh, why can't one of your competitors just do this on an iPhone or an Android device?" And I know you touched on it briefly at the beginning, but it might be helpful to delve into that a little more, because I know I have heard it from other investors.
Yeah, I'll make an additional comment without repeating everything that I said at first. There is some software tools out there that you can subscribe to manage Android devices for enterprise. And first of all, if you go to their websites, actually they tell you they don't sell directly. You have to go to the resellers. So it goes back into that iceberg thing that we were talking about at the beginning. The industry is sort of broken. Number two, it doesn't solve the fundamental problem. The fundamental problem is the fact that we have these space shuttles in our pocket to do simple things. Okay, so having a very amazingly strong piece of software that behaves like a super nanny for our device is basically band-aid to a problem that is not really addressing the question here. The question here is, you have over 1 billion, maybe 2 billion frontline workers in the world that all they need is an instruction, and you can't solve it with a band-aid type solution. So we're fundamentally changing the delivery stack. We're fundamentally changing the generational change in how this gets done, all the way from the cloud infrastructure down to the touch point itself. And that's what you need to do in order to make a difference. Again, we'd love to talk a little bit more about that stack and geek out on the tech side of things. So if you guys have more questions about that, maybe we can talk about it a little bit on the site.
Sounds good. Well, on that note, thank you, Matthias.
Yeah.
Go ahead, Lisa. I think you wanted to say something.
Oh, I was just going to say, give you a round of applause.
A round of applause.
For being our first guinea pig.
Oh, thank you.
And for letting me push you out of the nest earlier than you maybe wanted to be. But I'm just super excited about getting what you're working on out in front of our LPs and co-investors, because it's something that I personally have had a massive desire to see in existence for a while now, and this scratches the specific itch that I've been looking for manufacturing. To Dave's point, in manufacturing, it's not the person that's actually performing the task that will necessarily do the QA, so that would take them off of task. So that's a whole other, automated, put it on a conveyor belt, have automatic imaging, detecting defects, et cetera. But just for that use case alone, it's a huge global industry.
Yeah, well, thank you so much, Lisa. I really appreciate the kind words, and I can't wait for 2023. So it's going to be a great year for everybody.
Thank you. So if you stop sharing your slides, I will take over. Great, thank you. Okay, so now I should share my screen. Okay, so back to the beginning. Thank you, everyone. It's the Q4, fourth quarter 2022 update. We've already gone through the first two items on the agenda, and given that we're running a little long, I'll jump straight into the third one. And I won't spend too much time on the thesis and strategy. You're already quite familiar with that. The one thing I will say is Refashioned OS started as something we were doing primarily under Lisa's leadership at the behest of a huge fashion and apparel brand. The pandemic caused them to focus on other things, which makes a lot of sense. But they have now come back to the table and have started to initiate new conversations about what Refashioned OS is.
And brought in their friends. So it's very exciting. The other thing I'd like to add on ROF is that there is an immediate impact to be able to collaborate with and deploy and scale a number of our portfolio companies, including Jive, which is something I'm personally just really excited about.
Yes, and so as we thought in the beginning, the combination of the community, the hands-on operations through ROS and the fund is a very powerful cocktail that gives us an edge where our competitors, where other funds do not have that edge. The great news about the rolling fund is that we have crossed the $1.7 million mark in commitments. We now have 29 startups in the portfolio, 28 of them as of the end of last year. Last quarter, we made 5 investments. We continue to recruit new LPs every quarter. Thanks to your support, we made it onto the emerging 50 venture fund managers list. It's a list that was published by Signature Block. And we are grateful for any new introductions to potential LPs. We're continuing to work on the institutional fund, on raising the institutional fund. Introductions there will be welcome as well. Those conversations have taken a very different tenor because now we have the proof points that institutions questioned us about before we set up the rolling fund. So this is the emerging 50 list. I was saying to Lisa that this is the first time we've been recognized on a list that is not supply chain related. So that to me is good news. I also made the observation that I'm very skeptical about lists. In fact, one might say that I despise lists, but obviously this list is the best list. But obviously this list is the best list known to mankind because it has us on it.
I would like to add that that list matters to us so much because it is because of you, our LPs and our founders that nominated us for it, and they saw value in that. So thank you.
Thank you. So we have been busy. As you know, launched the fund in July 2021, made our first investment in September of 2021. I think when we made our first commitment, we had $250,000 in commitments. So that gives you a sense so that gives you a sense of how far we've come. Since then, we've made 11 pre-seed investments, 15 seed investments. I think the surprising thing is the Series A and Series B investments that we've made. And 20 of those investments were in 2022 with 2 reinvestments. The portfolio reflects our networks, which tend to be more diverse than our peers can tap into. That being said, we're constantly looking for founders that we should know but have not yet met. We're constantly thinking about who needs support a little more than others just because of the nature of the way the industry works. And so if you have any ideas that you think we should think about or consider, we'd love to discuss those. The portfolio has done well in an environment that has been described by some as the most difficult for fundraising in a very long while. 9 of the startups in the portfolio raised oversubscribed rounds. Of those 9, 4 raised follow-on capital since we made our first investment, and those were oversubscribed too. Autonomy's round was oversubscribed by 36% as an example. And the distribution of investments is heavy on the data and decision analytics side, which is something that we expected. I didn't spend much time on the thesis slide, but as you know, information infrastructure and how that interacts with everything else that happens in supply chains is something that's core to the thesis. And so we're not surprised that data and decision analytics is represented so heavily. That being said, when you look at the portfolio, remembering that we're industry agnostic, there is sufficient diversification even in data and decision analytics. Green screens. Green screens, I think, is the star in the portfolio at this point, mainly because of the vanity that is part of the venture business. Mainly because of the vanity that's part of the venture business. So they've gone from seed to Series A in 10 months, which is a record. The company is growing extremely fast. Most of our investments have happened. In fact, I think all of them have happened without us actually meeting our founders in person due to the pandemic. But last week, I was able to meet Dawn and some other members of the Green Screens team in Palm Beach, Florida, at the BGSA conference. And I'm convinced that we absolutely made the right decision. So now we're going to jump into the portfolio update, and this will be focused on investments we made last quarter. Before I talk about the portfolio, as I mentioned in the written update that went out about a month ago, in most of the quarterly updates, we won't talk about fund performance just because of the structure of rolling funds. Each LP's fund is somewhat different, depending on when the subscription started. But what we'll do is perhaps on the anniversary of when the fund launched, we'll always give an update then. And if there's something in the interim that we think is material, we'll give an update then. And obviously, if you have questions, you're welcome to reach out to us and we'll answer those questions on a case-by-case basis. So the investments we made last quarter. I'm going to speed through these because the details were in the update that went out and slides are on the website. So OmniChain, and Pratik is on the call today. OmniChain is an integrated supply chain planning and dynamic inventory platform. The key thing about OmniChain that we think is exciting is its absolute focus on empowering SMBs, small and medium-sized businesses, with modern supply chain management tools. It reflects something we observed during the early days of the pandemic and even now, which was that SMB operators would say, you know, I thought I was in the beauty business, but then the pandemic hit and I realized I'm in the supply chain business and I need all the help I can get. An interesting thing about OmniChain is that it integrates seamlessly with many of the other tools that SMBs use. And the team is very, very experienced in supply chain management. Overwatch is a prediction and detection of emergent supply chain risks platform. The first time I talked to Arjun, when he told me what they were doing, I said, oh, wait, so your sentiment analysis for supply chains, much like there used to be a lot of very popular sentiment analysis for the stock market systems. And he said that was a great analogy. So Overwatch is automating market intelligence and risk analysis. The team is a combination of cybersecurity expertise, AI and machine learning expertise, and foreign service expertise, which we think is a great combination. Again, tapping into our vanity as VCs. We met the team and expressed our interest in investing before they got into Y Combinator. And then once they got into Y Combinator, of course, we scrambled to ensure that we didn't lose our allocation. And Zara recently was recognized on the Forbes 30 under 30 list. Transmute is developing a verifiable credentials platform to secure global trade. This, to us, is interesting because of what's happening in the geopolitical arena. As countries, as geopolitical tensions increase and countries, regulators, trade regulators decide that they're going to pay more attention to where goods are coming from and where goods are going, it becomes more essential that that sort of information can be tracked seamlessly. And much like Matthias was saying in the presentation about Jibe, that's difficult to do if the information is on paper. And so what Transmute is doing is developing a platform, a VDP, a verifiable data platform, that regulators and other entities that participate in global trade can use. They've done some work for the Department of Homeland Security. They're doing a lot of cross-border work and are involved in the setting of standards in terms of what regulators and trading partners should use. And they have also done some demos for large companies, Microsoft being one of them. We missed out on the seed round proper because that happened in 2020, but the opportunity to invest came around again because they did a seed extension. Link is a bridging the gap between Bluetooth and 5G. And what that means is in situations where networks are stressed, perhaps the environment is extreme, perhaps there has been a natural disaster and networks are down, then a platform like Link bridges the gap between.
If you go to the next slide, it gives a good visual.
Then platforms like Link create a bridge between the different nodes in the network. They've done.
I'd like to point out that when I first saw a link, my brain immediately was going to, you connect that with Jive, and you have what I wanted everyone in Puerto Rico to have during Hurricane Maria, a way to be able to have a wireless mesh comms network for just the most basic check-in for safety in disasters. I mean, bringing the cost down, you could have a Jive device in every household for every human, so that after a disaster, you can identify where you are and that you're safe.
Yeah. Link has done a lot of work for government customers. In fact, some 3-letter agencies, both customers and investors as well. And now the effort is to get the products into more commercial environment. So as you can see, this is something that applies in a lot of different industries.
Yeah, we had a great conversation with the folks over at Link, and this is one of the things that you guys do to expand your network. It's been great to really meet companies in the rest of your portfolio, and yeah, I can't wait to work together with them for sure.
So thanks for saying that, Matthias, because now I'm not going to feel so bad when I email you right after this to ask you for your input, to ask you for your input on an investment we're looking at.
Let's do it. Yeah. Let's talk. Yeah.
Yeah. So this is a picture of the team at Link, and again, this was in the update I sent out before, but we created a year in review presentation, and this is all on our website and also in the.
It was just our entire Christmas vacation of producing this 204-page interactive PDF with links to podcasts and articles, and we're just so freaking proud of our portfolio company.
Yeah, and then you already heard from Matthias about Jive, so I'm not going to belabor the point there. But from when we, like I said, made our first investment in September 2021, we now have a real portfolio. There are 29 startups altogether, 28 in this deck, like I said, as of the end of December. They're all doing well. Like I said to them in an email that we sent to everyone right as the press was going on about, the world is coming to an end, the sky is falling and whatnot. What each of the startups in our portfolio does is essential to the customers that they target. And so, yes, the environment is difficult. Yes, fundraising is going to be difficult, but we firmly believe that if they focus on communicating the value they create to their customers and then communicate how that is going, how that experience is unfolding with investors, that they will do okay. It's going to be difficult for everyone, but eventually they each should be able to raise the capital that they need. And what that also means is that the ecosystem, the community of co-investors that we now have engaged with through the investments we've made is growing. One task we need to work on now is actually getting to know them better, so that we can collaborate more closely with each one of them. The macro environment, we won't spend a lot of time on this, because even though in this presentation we have highlighted specific articles, the general themes are ones that we have spoken about in previous quarterly updates. Things have not really changed. In this specific case, the argument here is that perhaps the world economy is experiencing a regime change. And economics, a regime change is when the various components of the economy, the way that they interact with one another, changes in a very fundamental way. And maybe one way to think about this is what's happening in the traditional economy and what's happening in tech. So in tech, there are a lot of layoffs, and huge tech companies are laying thousands and thousands of people off. But it seems as if the legacy economy, the traditional economy, seems to be doing just fine, and that is reflected in the in the unemployment, the rate of unemployment. And so that's one example of the point that the author is attempting to make here. And that theme is continued in this case as well, because the fundamental structure of the economy appears to be changing. The White House is working on an overhaul of the economy, and we're seeing that through things like the CHIPS Act, through things like the industrialization and manufacturing
infrastructure.
The infrastructure policies that the White House is adopting. And that's, again, a theme that we focused on a lot over the course of last year. The issues with China continue to be paramount. In this case, Germany is trying to figure out what its relationship with China should be. The difficulty of that process and those decisions, I think, is encapsulated most clearly in the fact that VW, which is obviously one of Germany's most prominent companies, derives about 50% of its profits from China. And so disengaging from China has implications that the German government has to consider carefully. And the China issue continues with Apple now saying publicly, according to press reports at least, that the goal is for it to produce 25% of iPhones and other products in India, shifting that business away from China. The federal government is taking steps to protect federal supply chains from climate-related risks. And
I actually have some notes on that. So obviously, a lot of the companies or all the companies ROS is working with, this would impact. So specifically, it says the federal supplier climate risks and reliance rule requires major federal contractors to publicly disclose their greenhouse gas emissions and climate-related financial risks and set science-based emissions reduction targets. So great, you actually now have to do that if you're working with the government, considering the government is one of the largest buyers of goods and services, purchasing over $630 billion in the last fiscal year alone. This will have a massive impact. But how do they do it? Well, they're going to do that through our portfolio companies. Really, the current infrastructure and the current systems are not set up for this transition, and that's where our portfolio of heroes come in.
Yeah. Thank you. This is more on the China issue. Again, we're not going to belabor the point. It's been in the news, and we've tracked this issue over the course of last year. Lisa, do you want to?
This? Yeah. So this made me, I mean, it's horrible, but I love when I can predict the future and people don't really believe me until they see it actually deploy, as I stated. Climate risk is the only consistency in our globalized systems. And so it has impacted Pakistan to such a degree that their flooding this past year basically wiped out their cotton crops. And it resulted in 7 million textile people losing their jobs in Pakistan. It's just a massive decimation of the entire region. And if you're not, and their solution is to actually invest in genetically modified seeds rather than reuse of existing fibers. Like, why can we not put all that resources into circular systems that actually can repurpose our waste streams is just mind-boggling to me. So it's obviously a direct correlation to the cotton commodities prices. They're now Pakistan's trying to get their raw materials from India. India is facing limits on the amount of cotton that they're allowed to export. And it's creating massive global cotton commodity price woes that are rippling around the world. So the only way you can not be impacted by this is to invest in replacing new raw materials that are grown out of the soil into repurposing existing waste streams.
Yeah. The CHIPS Act, we've talked about this before, that is plodding along. Companies are making investments based on their expectations of how this will unfold. More research, this time from BNY Mellon, saying that because of climate change and the effects it's having, there's going to be a huge and enormous redeployment of capital. That has been part of how we've thought about the ways that the investment thesis would unfold. And finally, companies are realizing that they need to rely on technology and innovation as supply chains around the world are being redrawn. And like Lisa said, we expect that this will bode very, very well for the startups in our portfolio.
Yeah. This article from the Wall Street Journal Pro on sustainable business is actually open. So if anyone wants to give it a read, it's really interesting. But regulations are driving a mad dash to try to figure out how to trace your globalized, as I said at my Business of Fashion Voices talk, your billion-headed global beast. It's insanity to think that that's going to be a reality. In the article, they speak to one company that has over 85,000 vendors in their globalized supply chain.
I think it's Unilever, and in the article they say it's 54,000.
Yeah, some insane amount.
Yeah,
so there is no way in hell, I'm sorry, but that you're going to have true traceability, transparency across a network that large in time for us to still exist on planet Earth. So I don't know any.
That's where Axstone and Jibe are going to come in.
Yep, and ROS orchestrating that.
Yeah. And then financial reporting, and there's a debate about this. I don't remember his name, but one school of thought is that the financial regulations are too extreme. But what's happening is that around the world, regulators, they seem to be converging on this idea that at least publicly traded companies, when they report their financials, will have to find some way to document their impact on Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. And if you don't know what that means, it basically is the difference between reporting on the greenhouse gas emissions that are a result of your direct operations to reporting on the greenhouse gas emissions that are the result of all the activity across the entire spectrum of entities and people that you impact. So this would include your customers, your suppliers, suppliers, and so on and so forth. And so the argument is, well, that is too extreme. And then on the other hand, the argument is certainly that this is necessary given the state of the world as it is now. And so it brings us back to this. Our belief, once again, is that supply chain is the foundation on which global GDP is built. And so that is the size of the opportunity. The reason you rely on us to invest on your behalf is it's up to us to find the specific niches in this huge pie where we believe that venture scale opportunities are available. And that's it. I will open things up for Q&A. Can I? Before anyone asks a question, can I just pat myself on the back? Somehow we've done this in 1 hour, which is incredible.
Yes, especially because Brian was saying he was going to have to kill some of my slides. I kill his words.
We'll open things up for questions, comments, observations, complaints.
Nothing.
Hey team, this is Pratik. I'll just say thank you guys for everything you guys do and your support. I know Brian and Lisa, you guys have been great, at least since we've been partners since December, right? It feels like forever. But it's only been a bit, and you guys have added some great value to our company and open up some decent relationships that we'll eventually keep harboring and cultivating. So I appreciate everything you guys do. This was great. I really appreciate you guys inviting us to this conversation. And yeah, it's great for transparency purposes. And one question I have for you guys, just as towards the end of the presentation, was around kind of the economic backdrop, the geopolitical kind of landscape, and the shifting tides of who knows what's going to happen. As you guys are kind of doing the research and planning yourselves, right, as a firm, what, I guess, guidance that you would give us as founders, CEOs of these companies trying to kind of break through some of the barriers? What guidance would you give around just kind of scale, right, and attacking the market, specifically around supply chain, because that's obviously still a big issue and it's in the boardroom now, right? So for us, we're attacking the market aggressively, but I guess from your perspective, what is your approach on just how aggressive, right? And the levels of attack that we should be taking.
Yeah, I'd like to say that, so first of all, I would love to schedule a one-on-one follow-up with you, because there's so many things that I think I can help you with. And for all of the portfolio companies, don't be shy about grabbing time on my office hours. I know Matthias has already been doing that, and a couple of other founders. So I'll put it out there, email all of you a half-hour and full-hour windows. I do office hours every Friday, so I can keep myself sane and know that it's a gift to myself on Fridays to hang with amazingly brilliant minds and help them solve their problems instead of wallowing in my own. And I would say that the best hack that I can think of to gain more scale during this difficult climate is collaboration. Like Matthias, we've introduced him to a couple of portfolio companies, and when their customers can become your customers because it's additive, it just makes sense. We're all in supply chain, and none of you really are competitors. You are all additive to each other. And I think that's a good hack, because we are a supply chain where you can, reach out to the other founders and share resources, insights about customers, who actually is a looky-loo versus who is actually doing business with early stage versus who actually will cut a check. So yeah, that's my 2 cents.
The thing I'd add there, and just to add, is this idea of an ecosystem. And so, to build on what Lisa was saying in the portfolio, if Wilson and Arkstone are already in Singapore, and Pratik, if Omnichain is thinking about how do we create a presence in Singapore, right? Well, the first thing would be, can I have a conversation with Wilson? Right, hey Wilson, here's what I do, and then listen to his advice, and then go from there. And perhaps there are, like Lisa was saying, there are companies that are already customers of Arkstone, who it would make a lot of sense if they spoke with you, right? And so that's an easy way. So if I hadn't skipped over the thesis slide because I was so desperate to stay within the hour. But if you remember the thesis, it's supply chains are networks, and platforms and ecosystems and information, right? So this idea of ecosystems especially is just really key to how we think about investing, but how we think about how the portfolio might evolve as well. And then of course, right, as you grow and as you become more self-sufficient, you know, then if you want to do things independently, that's completely fine.
Yeah, no, that's kind of great. That's aligned with kind of my approach, our approach around identifying, you know, parallel channel partnerships where we can really latch onto, not from a, hey, I'm going to introduce you to a potential prospect or a customer, but actually having some type of product in it, like a connectivity,
synergy.
Synergy, right? Where there's some type of connectivity at some point, which one, it creates a stickiness to that, you know, value proposition, right, that we're offering to our shared customer, but also creates more of a you know, intertwined product roadmap as that relationship grows. So we've got a couple of those working in the mix, at least for OmniChain. But yeah, I just want to get your guys' thoughts, and I think it's, yeah, that's great. The ecosystem, I think, is kind of the approach that we're taking. As you know, I'm a believer of, you know, you gotta have kind of strong relationships to accelerate growth, as opposed to trying to do it yourself. And that's one thing I learned early.
Yeah. Absolutely.
Just a quick
relationships. Sorry, Matthias, but the relationships, you know, obviously reach out and have a dialogue, especially if you can share customers, but it's the insights around customers and who the right people are for your decision maker may be different than somebody else's decision maker, you know, rather than just say, hey, who can you introduce me to? Sorry, go ahead, Matthias.
Yeah, just to follow up the networking and relationship aspect of it, coming out of this, you know, economic climate out there is one of the ways to cope with things. But also, sometimes these tough times is where is a good time to build companies. There's if you think about the last one, 2008, 2010 recession. Great startups came out of that. I mentioned in my presentation, Uber, I think it was really started out of there. My last startup, I built a team towards the bottom of the recession too. And here in Seattle, within the last month, between Microsoft and Amazon alone, there's so many resources that just came up on the market. And not because they were bad, but because whole teams got laid off. So definitely recessions is it's a really good time to actually build a company. Maybe that's just the eternal optimistic in me as a founder that talks like that.
In July, the email I sent to our founders in July, I think I said, it's your time to rise and shine. Especially as supply chain technology startups, right? Is when your customers are struggling that you go to them and say, here are all the efficiencies that we could introduce into your business. Here are all the areas where we could help you do more with less. So I think that was the line, that was the theme of my emails to your portfolio in July. But exactly, right? It's a difficult economic environment, yes. But what you do is about helping your customers do a whole lot more with less than they thought is possible. So.
Yep.
Other questions, comments, complaints? Hi, Valisha.
Last comment to the group. If anybody has any contacts, networks, friends, family that's looking for software development work, please send them my way. It's Pratik.Sony at OmniChain. So yeah, from a resourcing perspective, if anybody has any good software engineers, send them my way. I would love that. I'll put my email contact info in the chat. So my last thing, thank you guys.
Okay. Thank you, Pratik.
Don, I just wanted to say hi. I joined
hi,
late,
Dawn.
but thank you for all your kind words and thank you for everything you guys do.
Thank you. Thank you, Dawn.
I'm jealous that Brian got to take a picture or hang with you.
So there's an internal competition going on who can get our portfolio more social media publicity, and I think I'm winning right now by a long mile.
Well, it didn't hurt that we had Iron Mike at the thing last week
Exactly.
either, right?
Thank you, Doc.
So yeah, I think that kind of helped boost it a little bit.
Yeah. Other questions? Eugene, questions, comments? Eric, Brian?
Hey, Eugene.
Hey Lisa, hey Brian. So no questions like specifically. I'm just excited about what you're all building. Definitely a lot of gaps in supply chain, and it's kind of like top of mind for a lot of people as they try to fill in the gaps. And I have a supply chain software company. I'm happy to kind of talk to every founder in your portfolio about how we can like bring them into our deals, because there's a lot of synergy amongst what we're doing.
Fantastic. We'll send them
Fantastic.
your way.
So I am going to close, the call by putting a link in the chat to everyone. And I was beside myself with excitement leading up to the call, because we have finally arrived. There was an article in the Wall Street Journal about supply chain art. And you're probably asking yourselves, what is supply chain art? Apparently, there is an exhibition at the Museum of Modern Arts in New York that is entirely focused on supply chains. I think they call it supply chains and AI or something like that. And so Dr. Kate Crawford, she did this thing with a collaborator. The curators at the Museum of Modern Art saw it, and they decided it was so fascinating that they were going to create an entire exhibit around it. And the exhibit is going to be up for an entire year. And I remember when I first met Lisa in 2016, one of the reasons I knew we'd collaborate for a while is that we both thought we'd quickly get to a point where supply chain is top of mind for everyone, politicians, business people, individuals, and so on and so forth. And the Wall Street Journal publishing an article about the Museum of Modern Art putting up a supply chain.
All right, so I think this is a field trip. Who wants to join us at the MoMA?
All right. Well, on that note, thank you very, very much for joining us for this update. We're going to download the video, do whatever last minute prep we can to it, and then I'll send it out probably tomorrow or early next week. It will be the video and the presentation slides. So thank you. Enjoy the rest of your
Fantastic.
day or wherever you are.
Thank you. Bye.
Thank you.
Thank you.
Bye-bye.
Thank you.